Wednesday, June 28th, 2017, Monaco 64, home of alternative economics and contrarian views. So I like to talk about the dollar, and I'll look at the dollar index for that, and also gold and silver. And some of you have said that charts are useless and not important anymore. I disagree. I think technical analysis is still very important, as well as fundamentals. So I'm going to go over the technicals and fundamentals of the dollar this morning. So I'm going to bring up first a chart of the dollar index, a long-term chart of the dollar index, going back to around 2010, and it's a daily chart. And you can see here, the black line is the 50-day moving average, the orange line is the 200-day moving average. And as you can see, the interesting thing about this chart is if you look at July 2014, we started a pretty big bull run in the dollar index from around 80 to, I think it was just above 103 last December. And notice how the 50-day moving average went up above the 200-day moving average, just as the dollar index was starting its bull run from around 80 to 100 there, from July 2014 to like March 2015. And then if you think about it, since March 2015, for almost 2 years, the dollar's basically gone nowhere. I know we rallied last year from below 95. I think it was around 92.50, the low there, all the way to above 103. But it looks like we're back below, we're back below. It's like the dollar index has tried 3 times to break through 100, and it hasn't been successful. And the thing that is a bit concerning is that this has happened in spite of this period of time, since December 2015, when the Fed raised rates for the first time in like, almost a decade. And also has been talking about paring back its QE. Now it's talking about unwinding its balance sheet. It's raised rates another 4 times since 2015. It's talking up the economy, and in spite of that, the dollar is still stuck here, and clearly failed, on the breakout of the 100 level late last year. And I made a video a few weeks ago about the death cross, which means the 50-day moving average moving below the 200-day moving average, and that death cross seems to be, clearly, instituted now. Notice how much far below that 200-day moving average the 50-day is right now. Last year we had the same kind of event happen. The dollar, there's a death cross in the dollar, but then, the 50-day moving average did move back above that 200-day towards the end of the year. So maybe we could be doing that again. But we could also be starting a huge leg lower in the dollar, just like we started a huge leg up in the dollar back in July 2014. And this is in spite of all, the fundamentals that we are being sold by the central bank. I know in reality, the economy in the US, not only in the US, but UK and Europe, the economies are not doing well. Central bankers are just like making things up, pretending, trying to keep things going, saying that things are okay. But, investors and markets and algorithms react to these comments. So in spite of that, all the hawkishness from the Fed, the rate hikes, the dollar's gone nowhere. So can you imagine that if we actually start seeing officials, central bankers, admit that there's weakness and pare back the hawkishness, especially the Fed, we could see the dollar really come off quite a bit. And yeah, the dollar index year on year is down 5.75%. So now I want to go back to, I want to look at a short-term chart so you know what you need to look at in the dollar index. So as you can see there right now, this is like a 2-year chart. We just made a new low today compared to the low a week or so ago there, around 96.30. You know, since the Fed hiked rates in December, we've been down on a downward trend in the dollar, making lower lows, lower highs. And I think the next level is 94. It's a spike there. You know, if you go back a little bit there, when the 50-day actually moved back above the 200-day, the last time there was a spike down, that was around 94. But I think the target, really short-term target, well, medium-term target would be 92.50, which is the, you know, the low there, halfway through the chart. Yeah, and not looking good, the dollar index. Of course, we could go back up, but it looks right now that 97.50 is going to be a key resistance if we do correct back up. Let's see now, and then I want to compare also the how gold is done on the year and silver, because right now the sentiment for precious metals is not great, and it's understandable. You know, the other day we had that raid on gold. Some people are saying that it was a fat finger, but I've worked in the markets and I know what a fat finger is, and that wasn't a fat finger, because usually a fat finger, the market goes straight back up to where it was before the fat finger. And with gold, that didn't happen. We're trading around 1254. You know, we went back to 1236, went down to 1236. Then we stayed the whole day around 1240, 41, 43. If it was a fat finger, it would have gone straight back up. So that's just an excuse to take the spotlight away from the manipulation, in my opinion. But as I said, dollar index down 5.75% year to date. Silver is up 5.45% year to date. So interesting that silver is almost kept, you know, the same performance, inverse performance as the dollar. You know, silver dollar, maybe, you know, maybe there's something to that. But gold is up 9% year to date. So actually gold is doing quite well. It doesn't feel very good right now, I know. But yeah, so that's what I wanted to talk about. The dollar index, it looks pretty precarious right now. And what does that mean fundamentally? Well, it means that I think the market doesn't buy what the Federal Reserve is telling them anymore. So that means the market, the Federal Reserve is losing credibility. And the dollar basically isn't, you know, technically it's a Federal Reserve note. So if the institution that issues that note is losing credibility, the value of that note will go down. And that's what I think is happening here. What will that mean going forward? I think maybe the Fed will have to turn around, or, you know, if they keep raising rates, it's actually going to have a negative impact on the economy and the dollar. So this morning, what's happening? Well, yesterday the main movers were the stock market and the euro. The euro was up strongly on the back of Mario Draghi comments, supposedly hawkish comments, even though he said he's going to keep pumping money into the system. Yeah, the NASDAQ was down, I think, 1.7%, so tech stocks didn't do very well. I think the S&P was down over 0.5%, the Dow not as much. So yeah, we had a down day in the stock market, which is quite unusual of late. This morning, gold is up about $4 at $12.51. So kind of creeping back up. We need to see a bigger move, of course. Silver is actually leading the way this morning. It's at 1677, up 10 cents or 0.65%. So outperforming gold, which is good. The Dow is unchanged so far at the moment, and it's about 8:40 a.m. S&P unchanged as well. The NASDAQ 100 future is actually down 0.5%. And the dollar continued to weaken this morning. Dollar is the euro is up 1/3% at 113.75. The pound is only up 0.05% at 128.20, and the dollar is even dropping now against the yen at 112.18, down 17 pips. Yesterday, the dollar actually traded up against the yen, and I think that's why gold and silver didn't do as well. Despite the weakness in the dollar index, because the yen kind of helped the dollar by dropping against the dollar, while the pound and the euro actually went up quite a bit. I've spoken many times about the relationship between dollar yen and the price of gold. So yeah, that's it. If you enjoyed this video, please give me a thumbs up, share it far and wide, subscribe to the channel if you haven't yet. And also watch me on steemit.com and follow me on Steemit, STEEMIT.com. I'll talk to you later. Bye.